Hey everyone, welcome back to the Ultimate Auto Finance Guide. If you're looking to get the best approval odds for your next auto loan, you're in the right place. I've been a senior credit analyst in auto finance for 20 years, and let me tell you, I've seen it all. People coming in with credit scores lower than a snake's belly, thinking they can drive off in a brand new truck. Folks, it doesn't work that way. But that's why I'm here. I'm giving you insider tips that lenders don't always share. The kind of stuff that'll get you behind the wheel of that new car smell. Let's get started. Listen up, folks. Not all lenders are created equal. It's like going to a fancy steakhouse and expecting a veggie burger. Some lenders cater to those with credit scores so high they could get a loan from a rock, while others specialize in helping folks who've had a few financial bumps in the road. Before you even think about setting foot in a dealership, you need to know where you stand. Got a credit score north of 700? Great. Head to your local bank or credit union. But if your score's a little lower, don't worry. There are lenders out there who understand that everyone deserves a second chance. Find the right lender for your situation and you'll be one step closer to driving off in style. Now let's talk about LTV, or loan-to-value ratio. This little number tells lenders how much risk they're taking by giving you a loan. Think of it like this: the lower the LTV, the lower the risk, and the happier the lender. Want to make a lender do a little dance? Put down a hefty down payment. I'm talking 10%, 20%, or even more if you can swing it. Trust me, a big down payment shows you're serious about this purchase, and lenders eat that up. Lenders are obsessed with this thing called your debt-to-income ratio, or DTI. It's basically a measure of how much you owe each month compared to how much you bring in. If your DTI is higher than a giraffe's eye, lenders might get a little nervous. They want to know you can actually afford to make your car payments, and if you're already swimming in debt, they might not be so keen on handing over a loan. So before you even think about applying for that car loan, take a good hard look at your finances. Can you pay down a credit card or two? How about that student loan? Every little bit helps. Chapter 4, keep your credit report clean before applying. Your credit report is like your financial report card. It tells lenders everything they need to know about your borrowing history. And just like you wouldn't want to show up for a job interview with a messy resume, you don't want to apply for a car loan with a credit report full of errors and red flags. So before you even think about stepping foot in a dealership, do yourself a favor and order a copy of your credit report. Check it carefully for any mistakes, and if you find any, dispute them immediately. Chapter 5. Show stability. Lenders love stability. They want to see that you've got a steady job, a place to live, and a history of paying your bills on time. If you're constantly jumping from one job to the next or moving every 6 months, lenders might get a little nervous. They want to see that you're a good risk. And a big part of that is having a stable financial history. Chapter 6. Choose the right vehicle for your profile. Here's a little secret that lenders don't always tell you. The type of car you choose can actually affect your approval odds. That's right, lenders have preferences too, and they tend to favor cars that are, well, a little less flashy. They're looking for vehicles that are reliable, easy to resell, and not likely to depreciate faster than a melting ice cream cone. Outro: drive off with confidence. There you have it. Insider tips, straight from a senior credit analyst with 20 years of experience. Follow these steps and you'll structure your loan for the best approval odds. If you found this helpful, hit that like button, subscribe for more auto finance tips, and drop a comment if you have questions. I'll see you in the next video.